Eh, Hello everyone, welcome to Smart Investing with Philip. Okay, today we jump straight to the market update. So we're going to see the main indexes, so the key stocks move, and I want to go through two videos with you and just make some comment on these two videos. So let's go. So let's start with QQQ. So like I said on my review on the QQQ, you can see that today the market went down slightly. Actually, it went down quite a lot more during the day, but it rebounded. It went to even breaking the 200 moving average on the long term. It went actually to 487 and it rebounded to 495. So that's quite a good news, because actually when it broke through the 200 moving average like in the past, the market technically rebounded. So it might be that we are reaching a bottom, especially that I told you that the RSI is close to the 30. So this is actually everything that I was expecting. So I added to my position of the QQQ, sorry, on the QQQ, yeah, that's right. Because I told you if it touched the 200 moving average, I will start to add to my existing position. This is exactly what I did. And I believe that we are approaching the bottoming of the correction of the Nasdaq. So if you look how much the Nasdaq corrected since the top, we are close to 10% actually. Actually, we went to 10%, which is not a coincidence, because there are a lot of computer, they are programmed to do certain things at certain levels. So 10% is correction territory. It's not anymore a pullback. So I believe that this is what happened. This is the pullback that we see here and that we see again here. So I think it's something very common. A correction of more than 15 or 20%, we had one last year, and usually there is only once every single year. So that's the statistics. So if we move on to the S&P 500, the same. The S&P 500 retreated by minus 118, actually underperforming the Nasdaq. But actually, again, it touched the 200 moving average on the long term, and then it rebounded sharply from that level. I told you that 574 was a key support level for the S&P 500, and it will certainly touch the 200 and rebound from there. I believe we are bottoming also on the S&P 500, and what makes me say that is again the RSI. There are a lot of different things that makes me think that we are approaching the bottom, because the volume on the sell today was extremely high. But despite that the volume was extremely high today, we see that the market actually rebounded in the intra-session of today. So that's a very strong indication. One thing to notice is that the TLT has actually went down at the same time as the equity market. So today, both the equity market and the bond market did really badly. So what we can see also on the MAX 7, the MAX 7, I told you that we are going certainly to touch the 200 moving average, and we did. Like both for the S&P 500, for the Nasdaq, we actually tested the 200 moving average today. And that's a critical level for a lot of algorithm traders and a lot of traders. I mean, if there is no reason why we should go much lower than 200 moving average. It's just like the market let off all the excess steam that they were priced into the market, and they were coming back to the long-term average. So I think it's good. It's a very, very good news actually that we went back to this moving average. We can see that overall the Nasdaq the NVDA slightly rebounded, but nothing very major. But I don't think that the NVDA will go much lower than that. The maximum it can go back and is to retest the 100. And it could certainly be testing the 100, because I can see that it's oversold, but not like extremely oversold. It's still at the 40. So you can see that there is a divergence between what happened today and what happened in the market today. The market went up for NVDA, but the RSI still went down. So there is a slight divergence, and it's a bearish divergence. So I think it could retest easily the 100. I'm waiting that it touch the 100 before to sell some put on NVDA, because I don't think that the volatility is over, especially with the employment data that we will have on Friday. Amazon, nothing special. It tested the 200 moving average. I sold some put because I told you when you test the 200 moving average, it's a good moment to sell puts. It broke the Bollinger Bands to the lowest level. You see, it broke the Bollinger Bands to actually collapse. So it's more likely that it will rebound from the 200 moving average, especially that there is nothing wrong with Amazon. Google, the same. It will retest the 160. It rebounded slightly today, but I think it will. So basically, it's on the point of control, but it will probably retest the 160. But if someone wants to really enter a position in Google on the long term, then maybe they can sell a put with the limit of 160 on the strike price. Netflix, nothing special. Meta, nothing special. Meta went down today, just breaking the Bollinger Band and rebounded to that lower limit of the Bollinger Band. So I would say the Meta is also in a good place. So let's go through stock specific. AMD rebounded today. I told you already that you can see if we look at the Fibonacci retracement, I told you that if we probably will test the 0.76 0.78 retracement level, that's exactly what it did. Almost precisely, it rebounded from the 0.78 Fibonacci retracement. This is not a coincidence. Again, you have to understand how algorithm traders and institutional investors are playing. This is a critical level for AMD. I mean, it's very unlikely it will go much lower than 95. Okay? Because otherwise it's a full retracement from the low of 2023. But again, are we in the situation of 2023? I don't think so. So most of the gain that has been actually done from the low of 2023 to the high of 24, actually most of them has been lost. So I think it's a very good entry point to average down a DCA on AMD, or actually to maybe start a new position in AMD for the one who was not very convinced that AMD was a good deal at 130, 120. So I believe it's a very strong opportunity to start to build a position in AMD. Palantir, nothing very interesting here. It's just like it wants to keep the level of 84, 85. I still think is very much overvalued. Still at that level, you can see SMCI rebounded today. It actually went over to 10-12%, but it actually closed down at plus 8.5%. Otherwise, Bitcoin also rebounded, and MSTR also rebounded sharply because of Bitcoin rebounding. IWM still continue to go down. I told you if it breaks the lower channel on the upper channel, then it will retest the point of control. And this is very frustrating because I'm investing in IWM, but it seems like again it tried to break out, it tried to continue to go and move out, but actually it break it again. This is very frustrating. Like the same thing is a fake breakout. Here you are actually breaching and you are collapsing, even going lower than 200 moving average. If you go on the weekly on the IWM, on the weekly, it just broke the lower level of the Bollinger Bands and want to test the 200 moving average on the weekly. I don't think it will go much lower than that. If it does, then it will retest the 200. But again, I'm very frustrating with this one. I have a lot of investment. It's years and years and years and years. You see, it was oscillating. Now it just break that channel. You can see here, this one and this one between the level of 200 and 164. And then when it break out there, it want to retest it. You see, we are just back. I will just draw it because otherwise you will not see it. Hold on. Seems like we are back. You see, we are back to this level, and this level is actually the upper limit of the range bound that it was doing for almost 2 years. So we are retesting that range bound limit of 200, which is very frustrating, and it's the long-term moving average, 200 moving average. So I hope, because it diverged from the 200 moving average a lot, then now that it went back to this 200 moving average, that it will rebound from here and definitely break out and just rally from there. I mean, if you look at Tom Lee and all the commentators, they were expecting a bull market for the small cap last year, and again today, this year, they were expecting a bull market for the small cap, but I doubt that it will be again the year of the small cap. It's very frustrating to have a lot of investment in small cap waiting for that massive shift, massive rotation into small cap. But with all the tariff uncertainties, all the inflation uncertainties, then it's impacting more than small cap than the large cap. Maybe if the Fed start to decrease rate again because with all these uncertainties, then maybe small cap will take off again. But then I don't know. I don't know anymore what to say about small cap. It's very frustrating. So let's watch the video now. First of all, this video on the market could be bottoming this week, say Fonstrat Tom Lee. And this is the video I want to bring to you. He says we are bottoming in the market because it's very, very bearish. I mean, we have never seen the level of bearishness in the market than this week. I mean, the last time we saw the bearishness of the market, the same level of this week was in actually 2022, around October, November 2022, which was almost the bottom of the bear market in 2022. So it's not a coincidence, because if you look at the survey of the bullish, bearish, and neutral, then the survey of the bullishness and the bearishness has never been so high than back in 2022. So it's when there is so much bearishness in the market, it's always an indication that we are bottoming and the market will rebound from this level. I mean, historically, if you do that, then we'll never be wrong.
Fundstrat co-founder, managing partner, and Fundstrat Capital CIO, and I can just see you. This is Tom playing out exactly as you said. Choppy. You said exactly this. You said choppy for how long, but then the S&P again starts moving, and this is not, I don't think, an obvious or a logical conclusion to have right now with all the bad news that we're hearing about these policies. Everybody thinks the market's headed lower.
Yes, but instead we could be bottoming, maybe this week.
And this is the choppiness you were talking about. And, you know, I think you use a combination of fundamentals and technicals, obviously, to get things right. And the reason for the choppiness was going to be the first 100 days of this fire hose of executive orders and everything else.
Yeah, that's right. It's kind of weighing on investors' minds. We're seeing it even in surveys and CEOs, because the tariffs and Doge are, you know, the Doge is creating austerity. Tariffs are creating uncertainty. Businesses are maybe sort of sitting on their hands. This is why I think the markets have been sort of sinking and momentum has done so poorly. But to me, Friday was a good day because, you know, it was a bad news headline, but markets actually rallied.
Yeah, World War III is usually not a good headline for financial markets, or a continuation of a very expensive, you know, guns and butter. Using guns or using weapons and depleting them and having to rebuild them and everything else might be good, I guess, for the economy. It doesn't seem like a great thing. I'd rather be spending it on AI or something like that, wouldn't you?
Yeah. I think we're even rebuilding parts of the, you know, the U.S.
Right, exactly. So from here on out, you think we bottomed? Have we seen the lows already? Because we didn't get worse than, what did we get, 5% on the S&P as far as the drawdown?
Well, I think investors are going to be kind of watching out of the corner of their eye, because Friday is the jobs report. Last week, consumption kind of raised concerns that maybe we're slipping into a slower downshift in speed. So if the jobs report is really weak, there could be some panic.
I would think that it would be, I mean, you know, we know about these crack addicts in the equity pit. They want more rate cuts. I would, if it's not too bad, just soft a little bit, and it brings back the prospect of more than 1 or 2 rate cuts, I could see the market rallying.
Yes, that's right. I think if the job report is bad and maybe we initially panic, like even that day, then everyone's going to rethink and realize not only is the Fed put back, because the Fed now will need to cut, but I think that some of the things that look like the White House wants to slow the economy, they don't want to get to stall speed. So then the White House, I think, the Trump put comes back. So I think it helps markets.
Isn't the bar very high, though, for Fed rate cuts to be back on the table? I mean, let's say we do have a softer jobs report. I mean, the Fed, and many Fed officials have said that the tariff issue they would look through. And so even if tariffs put grit in the economy and we have a softer sort of economic backdrop, that may still not be enough for the Fed to do anything. So that Fed put may not be worth much.
Well, I think it just depends on what the job number looks like. You know, the Fed has not worried about the labor market being inflationary, but they would certainly worry if unemployment's picking up or if we have a negative jobs report. I don't think it's negative, but something, you know, it could be well under 100,000. If it is, I think the Fed would actually have to get off their hawkish clause.
What is the fundamental and the technical backdrop for bottoming happening this coming week?
Well, you know, I think the best way to define a bottom, and Tom DeMark has mentioned this before, is stocks rise on bad news. And so Friday was maybe the first sign of bad news, the market's bottoming, but I know our technician, Mark Newton, doesn't think we're there yet. He wants to see more signs of exhaustion, but we've seen sentiment turn negative, so maybe Friday, you know, but it could have already bottomed too.
Okay, so basically this is very interesting what he's saying. He's saying that the market will bottom this week, especially with the job data on Friday. And I would agree that I think the market is bottoming. Actually, he was saying that the fact that the market rallied on bad news on the last Friday, it's a sign that the market is bottoming. This is true, but more strongly, technically speaking, we can see the RSI as at the oversold level at 30. We can see that all the indices were touching the 200 moving average, which means that on the long term, then the movement of long-term indices, there is no other steam left into the pricing. And then what we can see also on the indication that the market will bottom is that I told you that on the manager survey, on the institutional investor survey, the bearishness has never been so high. We are reaching around 60% of bearishness in the market from professional investor. And the last time we reached 60 was back in the October-November 2022. And October 2022 is actually almost the bottom of the market. If you look at, you see the Nasdaq, back in 22, the bottom of the market was October 22. You see here. So it's not a coincidence. That level here is when the same level of bearishness happened. The one of today. It's just to tell you that a huge correction here. I would say it's a market crash of minus 38%. Here you only drop by 10%. You have the same level of bearishness. It's always a sign that we are massively, we have corrected enough and the market will rebound from here. The situation we see here is a major increase of interest rate. That's what caused the market collapse. We don't expect an increase of interest rate. We actually expect a decrease of interest rate. And like they mentioned during the video, if they expect a decrease of interest rate, this will be bullish for the market. Okay, let's move on to the next video. This one talk about Nvidia, Tesla, Palantir, that apparently these stocks have seen the most net buying of active stocks in the trading platform for retail investor. This really shows you that retail investors are taking a lot of risk on these retail names. And probably institutional are offloading and selling them as bag holders. So you have to be very careful. I told you not to chase this momentum stock. But still, they believe the market has actually corrected enough in these very high volatile, high profile name on the retail market. And they believe they want to do the deep buyers, you know. They want to take advantage because in the past, deep buying has been quite successful as a strategy. So that's why they see now an increase interest and actually the highest net buying in Nvidia, Tesla and Palantir. Let's listen to what they say.
these recent declines. Our next guest says that NVIDIA, Tesla, and Palantir have showed the most net buying of active stocks on his platform. Favors some low volatility, high dividend names here. Steve Sosnick's with us, Interactive Brokers chief strategist, joins us here at Post 9. It's a good day to have you. Good to see you. Thanks for coming in. Talk about why those names in particular are moving.
You know, we're still having this little battle between, you know, what I'm going to call FOMO, MOMO, and NOMO. You know, basically, there's still this fear of missing out. We see here just this booze bounced like 40 points since I've just been walked from there to here. And so people really don't want to miss what they see as a buying opportunity, because for the better part of the last few years, every dip has been a buying opportunity. This one, not so much. And I think our, you know, a lot of what we see are active traders sort of went into that strategy, hoping this will pan out. And, you know, and those moments where it does pan out, we see, you know, people jumping right back in.
Right. So this notion of a retail buyer strike combined with a hedge fund momentum unwind, is that a fair framing at the moment?
To some extent, I would say our customers really range the gamut from small investors to large investors, and very heavily, you know, the numbers I'm seeing are very heavily balanced weighted, I should say, toward active traders, because if I'm looking at active activity numbers, it's going to be the most active customers. Those, one of my friends at the CBO calls it pro-tail, because, you know, they're sort of retail, but a bit more.
So what are they doing with tech? The heavily owned Mag 7 stocks?
As of the last time I checked the numbers this morning, they were still buying. NVIDIA remains the most actively traded and the most actively bought stock on our platform, Tesla being number 2. These stocks brought them to the dance, and they're not abandoning them.
Was Friday a good example of that too? What do you think happened there Friday? Or was it about month end, something else?
I think Friday was month end. I think that close was for lack of a better word, phony as can be, but it shows you how the market, as soon as there's a viable dip with any little bit of momentum, people jump on it. And it was probably no coincidence that it was month end, certainly the month end bargain hunting, but also no coincidence that it was a Friday where you had weekly option expiration, and of course the daily option.
What about the day part? First 2 hours of trading versus last 2 hours? Are you seeing?
This one is not very interesting, this beginning of the trading hours, the end of the trading hours. It's true that lately we see a lot of move on the end of the trading hours because institutional are taking a lot of action in the end of the trading hours. But let's move on to the VIX.
We've seen over the past couple of days, when we think about the potential for a government shutdown, frankly, in less than a week and a half, is it wrong to think that we could get 1.5% daily moves on SPX? No. So I think it's not. It is reflecting more caution, not reflecting outright fear.
What about cash levels?
You know, I don't have a ton of clarity into what our customer cash levels are, Sarah. I wish I could tell you.
But so then how do you describe sentiment overall? I know you talked about buying the dip. So is it overall optimistic?
It still remains, again, when I checked sort of our top 25 list today, it was not just the names that I mentioned. People were buying triple Qs, people were buying SOX L, the triple SOX. You know, there's still this love of leverage, and I think until you see that shaken out, you know, where people are maximizing risk, at least active customers, active traders are maximizing risk, you're going to get this kind of grind back and forth. You haven't seen the full shakeout yet.
Right. Kind of like the leveraged home builder, the nail, right? That's been a tough lesson. Steve, thanks. Good to see you. Appreciate it very much.
Okay, what he said is very interesting because this is exactly... Hold on, huh? This is exactly that I think it's bottoming out, but it's not a full crash. Because when there is a full crash, full market crash, you will never see investor deep buying in highly leveraged ETF like triple Q, 2 times, 3 times leverage, or NVIDIA leverage, Tesla leverage, all the ultra leverage ETF. So if people are still buying massively this ultra leverage ETF, that means we are just seeing a correction, and then the market is still overall very bullish. People are just taking this opportunity for this correction to load up on the high leverage ETF so they can actually get the boost and the hum when the market recovers. So definitely, I believe Friday, after the unemployment number, we are going to see a rebound in the market, and we are going to see the bottom in the market. Don't expect much more downside from this market. like this, I take the risk to really say it, but everything I look technically and fundamentally, but also from a psychological point of view, you cannot see more downside than what you have today. Of course, there is no 100% guarantee, but this is my gut feel, and I hope this is exactly what happened. What I'm doing now is I'm actually topping up my existing position in my QQQ, in my SPY, in my Max 7 funds, and also I topped some position on AMD and some of the names. And I would say, I hope you have not sold your stocks, because you will regret it, because the market will rebound from next week. This is my hunch and this is my gut feel, and I thank you so much for watching this video. I hope you have enjoyed this video. So I invite you to help me to grow this channel, and to hit the subscribe button, the like button, and to leave a comment. This channel is new. It's very difficult to get some traction, so help me to get this traction. It doesn't cost anything, and it's really the only thing I'm asking you to give my insight. Thanks a lot. Have a good evening. Bye.